Good afternoon, everybody. Welcome to your Thursday edition of the Trader Merlin Show. It is, as we mentioned, Thursday. For those of you in crypto watching a little bit of a bloodbath, apparently Elon Musk, SpaceX selling $373 million worth of Bitcoin acquired, creating some waves out there in the marketplace. So I've seen some nice sell-offs. Before I get to our guest today, I'm going to post a link into the chat. As you guys know, tomorrow, or actually, not tomorrow, it's today at 4 o'clock. Pacific time, so right after this show, well, I'll probably wrap the show about 2:45 today, give myself a little break and to get ready, but I will be doing a presentation for Online Trading Academy dealing with cryptocurrency, building a portfolio, and now probably couldn't be a better time to do that given what's going on in the marketplace today. So that link in the chat there, you'll see a landing page that looks just like this. Fill out that registration, and hopefully you'll make it in time. I know it's a limited space room that was filling up pretty quickly, which is good news for me, but if you guys make it in there, great. If not, we'll talk about it at some point in the future. All right, let's bring our guest on the program. He's been on many times, out of Chicago, futures trader, does a lot of different things with the markets, and I thought today would be a good opportunity to talk about kind of maybe higher time frames. I know that predominantly we look at Jerry Baldwin as being, a swing trader, shorter term, but we had a conversation earlier and he said, the larger time frames are critical to me and important. So let's start there with trading the larger time frames with Jerry Baldwin. Jerry, how you doing, my friend?
Merlin, I'm fantastic. How are you? It's great to be here.
Good. You got your summer shirt on and everything. You at the beach right now? What's going on?
I tell you what, I was there earlier, man, and we had some beautiful weather here in Chicago today. So yeah, I was actually at the pool, and my mom and dad came out and visited. So we spent a little time out there, and wanted to get back in here and hang with you for a little bit and talk some futures.
Yeah, good to have you on, man. It's been a while. Hope things have been well.
Thank you. It's been too long, actually. Yeah, it's been a busy summer, enjoying the summer and doing a lot of fun things, and so yeah, thank you for having me back. Always a pleasure, and hopefully we'll be doing this again very soon. And as I continue to kind of work my Pacific Shore site and my own trading, and a lot of great things have been going on though. So we'll get to them all today. So always a pleasure.
Let's dive into it then. We'll just shoot right for the hip. You and I talked a little bit earlier, and you mentioned about the larger time frames. And at the beginning, I was kind of like, well, I wouldn't imagine that you used the larger time frames as much in your trading. But let's start with the importance of larger time frame trading to you, and maybe what your time frame structures are for your style of trading.
Yeah, absolutely, Merlin. And also, first of all, a big shout out to the people who are from my room and who are with me on Pacific Shores, and they're watching this. I always promote the heck out of you and talk so well about you, and they love your show. Many of them, they're tuned in whether I'm on or not, but they love you. They love your show. And I want to say hi to those guys because they're a big part of what we get to do here every day in the trading room. So, but yeah, larger time frames, Merlin, I think, the difference sometimes between a professional trader and an amateur trader is understanding the trends on those larger time frames, and it's almost, we've heard a million analogies, but one of which is like having the wind at your back. And when the larger time frames are trending consistently, and unanimously across the board in one direction, it makes it flow that much easier and increases the probabilities that much more on some of the smaller time frames. So, smaller time frames obviously are whatever people decide that they want to use as their time frame of origin or as their trading window, and I mean, we've seen 1 minute, 3 minute, 5 minutes. Some people might use 15-minute for their active trading. I use all of them, but I use probably the 5 more so than any of the others, because now we can manage risk a little bit more effectively with the micros. And so I like that 5 minute for, an entry window or an origin window. But blending that in the direction of the larger time frames is just, it's amazing, how higher the probabilities become when you start to do that. And, I've got my radar screen, Merlin, which I know you're a big fan of, as am I. Can I share that with you real quick?
Sure. Let me, I don't think I have, there you go. And before we do that, let me just quickly ask you, you say larger time frames, and you mentioned 1 minute and 5 minute, right? And I think that it's important because every trader is going to go through that discovery process. When you talk to someone like, RIP Bob Dunn, he'd be like, well, it's the monthlies. So that to me is the big time frame. Start with the monthlies, worklies, and his weeklies, and then his lower time frame, small time frame would be a daily, like crazy. I'm assuming that you're probably not thinking the monthly time frame here, but again, maybe just walk through the spectrum of time frames from a yearly chart down to a tick chart, and what is in your mind monthly or long term or large time frame, and why is it important to you?
Yeah, no, that's what I was going to segue into here.
Okay.
I can give them a visual with the radar screen. That's what I was going to do with
go
that.
for
It's
it.
yeah. Let me share with you, because this will give them actually something to look at rather than just me talking. But so yeah, and you're right. It's different for everybody. I mean, if you're trading, a 15, 30-minute window is an entry window, in my opinion, you do want to go bigger. You might use a daily chart, maybe a weekly chart. Yeah, of course, it's up to the individual. But for me, I'm going to put them up here now. You should be able to see them now. But this is my radar screen, and what I have the time frames on there for everyone, so they can actually see the visuals. And again, I'm just, I'm not afraid to share some things with people. But so I have a 1 and a 5 on there that I use basically as a time frame of origin or an entry. And then these are the ones that, again, it's taken me a lot of time, a lot of education, to kind of customize, my own time frames as to what I consider large. So for me, as an active futures trader, I consider the 60-minute as my largest time frame. So I will go to the 60, and then I'll go down to the 30, and I'll go to the 15. And those are 3 of the larger time frames that I require, to be trending, either bullish or bearish unanimously before I do anything on any of the smaller time frames. So like I said, that's very much, subject to the individual and what they like, what they learn, what they find works for them. There's if there's one thing I've learned, Merlin, over the years in this, is that there is no just one right way of doing this. You could put 5 traders in a room and everyone could be successful, and they all do things differently. So these are the ones I use, and they work very, very well for me and for, the people that I, that are in my room on a regular basis and going through my course content and things like that. So, but yeah, so for me, it would be 60, 30, 15. The 60 is the largest one I'm looking at. And again, that has to be perfectly aligned with regard to trend before I do anything on any of the smaller time frames.
And so, for me, once I'm actually trying to do some graphic stuff here for you, because as you know, I'm doing AI for the graphics for this show. So real quickly, everybody stay there. I'm going to show you a graphic that came up today, and I use this one for the show, but I actually really like this one. I'm not sure you can see that, Jerry, but what's cool about this is, it's a bunch of different clocks. And so we're talking about time frames. I asked AI to generate a bunch of different time frames from small to large, and I love this one because what it's showing is different mirrors. And I always love to explain multiple time frames from that perspective of, think of looking at things from a different angle. So, personally, I wouldn't even look at a 1-minute chart anymore. I never trade off it, right? I'm using it to be the smallest time frame I will go is a 5-minute. And I did post a poll here for everybody to tell me what is your preferred time frame. I will tell you my preferred time frame is the daily. I always start with the daily. I don't care whether I'm day trading or long-term investing. I always start with the daily. And then I think it ties right into what Jerry said is, I need to know where it came from and where I think it might be going. So for me, the daily says that. And then from there, I'll go 4-hour, hourly, 15. And then ultimately, if I'm shorter term trading, my execution will most likely be on the 5-minute. Now, all of us have to come up with something that's specific to our personality profile. And I'm going to ask you, Jerry, how long did it take you to find out your niche, your style, and apply that 60, 30, 15, 5, and 1? Because that's your 5 set, right? You got your 5-pack right there. How long did it take you to whittle it down to that?
It took me a long time, Merlin. Because again, there's so many different people with so many different opinions. And, I think one of the first things you have to do is establish whether or not where you're getting your education is credible. And so, for me, literally, it took me probably a couple of years before I was able to kind of understand that, because I would look at the different time frames. And one of the things that you've mentioned before is that, it doesn't seem like these would all align all that often. And so if I go too large, if I'm trading a 5-minute and I go too large in time frame with regard to trend, again, daily works for a lot of people. It works for you. But if I go daily or I go weekly, getting them symmetrical is going to be a challenge, and it's not going to happen often, because you can have a gap fill. You can have price gap down where the trend is bearish, and all of a sudden, all it does all day is go up. So it's that's the fine line that I had to balance. Honestly, I don't know, to be honest with you. I know it took me at least a couple of years, and it took me going through some different programs and some different, educators before I kind of was able to see exactly what fit me.
Yeah.
How about you?
Boy, I would say it took me a couple of years, because you've got to remember, when I first got into this, I was a long-term investor. So I was told, look at the, longer time frames. That's what the college teaches you, at least my idiotic professor had at the time. And then I went from that to high-speed scalping, where I'm literally looking at a tick chart. And I kind of went backwards engineered there and kind of got bigger time frames the longer I traded. And I would say it probably took me about 2 years to kind of say, hey, this is what I'm comfortable with. This is what really works for me. And then really, I think the last change that happened, which was very significant from a short-term perspective, is one of my I was so frustrated. I kept getting stopped out all the time. And my mentor walked by and he's like, what's going on? And I was all pissed off. Damn it, I keep getting stopped out. He goes, he looks at my chart. He goes, oh, you're trading a 1-minute time frame? Types in a 5, hits enter, and he goes, try trading off this chart for the next 30 days. And all of a sudden, my trading got so much better. I made a lot less trades. I was more consistent. I was like, it was that simple? But, that type of thing, I don't think I would have figured it out if it wasn't for my mentor coming in and saying it. So, it takes a while to figure it out. And, of course, as well as I do, markets change over time. So sometimes you think you got it down, and all of a sudden it starts to modify a little bit, and things are different.
Right. Yeah, no, exactly right. So, yeah, that's why that's why it's so much fun to come on here and, kind of get your input and some of the input of people as far as what they're using, what they like. And yeah, like I said, this for me has been working for quite a bit of time now. I was telling you before we started, one of the things I think is important is the credibility aspect. You've been doing this a long time. I've been doing this a long time. And one of the things that I was able to just do recently, and I did do this over the late spring, early summer, is I took another proprietary trading firm's test, basically, and they put you through 2 combines. And, if you are able to achieve the profit goals while not breaking any of the rules, you are literally awarded a funded trading account. And so it didn't take me too long. I was kind of quiet. It took me, I was pretty patient with it, but within the last couple of weeks, and I have the certificate, I was awarded another funded trading account as a result of it was 2 combines. You have to achieve a certain profit goal the first time through, like I said, without breaking any of the rules. You have to stay to the specific futures products, which are all up here. And then you have to do it again, which is kind of cool. You do it first time, and then you got to repeat it again just to show consistency and to show that you can manage risk and that you're, not exceeding a daily loss limit. So that was really cool. But, I'm proud to tell people that, I stay as active in that kind of stuff as anyone, because again, I'm doing this, all the time, and I want to make sure that, what I'm doing is shared, because it's, it's very positive, and it was another great experience for me going through that experience, as far as, again, really revising my own trade plan. That was actually the mindset when I did this. I did a trade plan course. It's on my website, but I did this trade plan course a couple months ago, and I basically took the course or the strategies and the content from what I did in the combines and put it into that course to help people with their own, progress in their own trading. So, yeah, it's been a busy summer, Merlin, but yeah, so identifying these and staying with them and kind of using them has really been useful. It's been great.
Nice. Good to hear. Good to hear. All right, I was reading through some of the comments over here. Actually, let me come up with the results from this poll here real quick. So we had only 31 of you. If you guys don't like polls, apparently, I thought interactivity would be fun for you, but only 31% of you, 31 of you responded. 41% said daily is your preferred time frame. 60-minute, that was 22%. 5-minute was 22%, and 12% went with the weekly time frame. So it looks like daily is the preferred time frame out there. But again, don't take my word for it. You have to experiment with yourself. And I noticed a couple people in here, which I agree. 1 minute works too fast for you. Right? Saying it's just too quick. I'm not that fast. I'm too slow. I'm too old. You don't have to necessarily be old, right? I know some old people who are very sharp and quick, but you're right. If you can't respond very quickly, if your reaction times are slower, then just step back and go bigger time frame. If that's too fast for you, go bigger time frame. And at some point, you'll get to a time frame that moves slow enough that it'll calm down or adapt to your speed of information digestion. So yeah, it's funny how we all have different things we click with. I'm a very fast person, as you guys can tell by about just the way I talk and the way I do things. But I still like to do the bigger time frames. I think that's the best one there.
And I think that works, Merlin, as far as now, like I said, and I know they've been out for a few years, but they're still new to some people as far as the micros, because again, you have to remember too, and certainly the viewers have to remember that the larger in time frame you go, that might be the more risk you're taking on. It depends on how you're trading. Like I said, I use that candle of origin or that entry candle. I use that whole candle in some cases as a stop, because that's price will travel within that candle, and then it will ultimately, hopefully go the direction you're expecting. But as you get larger in time frame, that risk can increase. And if you're only doing, stocks, obviously you can minimize shares on stocks, but with futures, the least amount you can share is 1. So, or the least amount you could trade. So now with the micros, though, we can trade for 1/10 the value. So we can actually use some of the larger 15, 30-minute time frames, 60-minute time frames, and still have a stop in there that, or the risk in there, that would keep you in a combine, for example, without getting thrown out. So, yeah, I'm all with them. So that's what I would add to that.
I like it. You were just about to go into something else. I could tell the excitement level was there. What were you going to go into next?
So is your poll saying that people are using the daily time frame as their entry time frame,
No.
their time frame of origin?
No, just what is your preferred? Like, if you had to look back and say this is my favorite time frame, not necessarily from execution or analysis, just you have one
Okay.
chart that if you could pick one chart to look at, what would it be?
Okay.
A bulk said daily, but everybody has their own specific ones. I was just kind of curious what people thought there. That's why I threw the poll up.
Yeah, no, it's a fair question. So I guess for me, it would be the 5, but that I would preface that now by saying that's only, and this again comes with experience and years of doing this, and I would say the 5, but that's only now if the larger, and in this case, the ones I have on the screen are with me, because if I'm taking the 5, and I'm not looking at the other ones, the probabilities of that trade going your way can be reduced significantly, and I think that's kind of the point of what you and I are talking about, is that at least be aware, whatever time frames you choose on the larger time frame trends, but at least be aware of what they're doing. Because if the market's down 400 points and you're trying to go long on a 5, odds are it's not going to work out. There may be a gap fill, there may be something might be oversold as far as an ATR or something like that, but the probabilities say that trade's probably not working out. So I think just being mindful of what the larger time frame trends are doing. I know for myself, it's really made a big difference.
There's another Brian here says, Jerry, do you look for the choach, which is if I remember correctly, it's just a change of character. Meaning, are you trying to spot trend reversals essentially in uptrends or downtrends? He says, do you try to spot those change of character on the lowest time frames for entries? He says, I understand that's a trade secret. Not a trade secret there, Brian. But do you? I know you may not be looking at the choach indicator, if you will, but are you using those like 5-minute to say, okay, I know the daily might be down, the weekly might be down, but we're coming into an area of demand. I'm now jumping into, let's say, the 5-minute time frame as we come in that demand zone, and I'm anticipating a bounce back up or looking for that change of character of that specific direction of the bigger time frame.
Yeah, you know what, Merlin, that's a great question, and maybe the viewer has it down pretty well. For myself, I don't do that very often because I just haven't found it to be high probability. One of the things I like doing, and I've got an indicator now that I give out to all my students when they enroll in a course, but it literally identifies it's a Globex ATR calculation, and it's a formula that predicts for you with a high degree of probability how high or low any specific product could go. And there's a mathematical equation that goes with it. So, it's almost like, it's based on ATR, average trading range. So if, the product goes outside of its ATR, meaning it's down too much or it's up too much, there is a probability of it snapping back, almost like trying to pull a rubber band beyond what it should, and then it's going to snap back on you. So, there are cases in there where it's not bad, but I'll be honest, that the times that I have tried to do what you guys are talking about, it hasn't worked well, just because the larger time frame trends are so bearish that oftentimes it won't. If it completes 1-to-1, you're lucky, but odds are it's not going to get to a 2-to-1 or 3-to-1. Like I said, there are exceptions, but for the most part, I try to stay with the larger time frame trends, just for probabilities. It means you trade a little less, but like you were saying with the 5-minute and the 1-minute, I'd rather trade less and have higher probabilities than overtrade and see those probabilities drop. I mean, maybe that's just years of experience in doing this, but I like to see things go my way. And if it means I trade a little less by having the larger time frame trends, in my direction, that's the way I like to go.
It's funny that you say that. It's like you're getting old. You're getting old, dude. I know you don't want to admit it. You're not going to want to admit it, but you're getting old. It's kind of like if you said, hey, let's go out drinking. All right, let's go out party. I know we don't have people in the audience who don't drink alcohol, but, for myself, who I do drink a little bit, you go back to my early 20s and it was like, hey, let's go out drinking. It's like, when, where, how much? Let's just do this thing. And it was like, no problem. You didn't even have a second thought about it. Just get hammered and have a good night. That was your 20s. In the 30s, it's like, friend says, hey, let's go out drinking. You're like, yeah, sure, that sounds good. What day? Wednesday. I can't do Wednesday. Let's do Friday and Saturday night. Then you hit 40, and it's like, hey, let's go out drinking. You're like, no, pick a day. And it's like, I can only do it this time. I have one beer. You hit 50, and you're like, come on over. We'll have a drink at my house, maybe one. And by the time you're 60, you may just stop drinking. The point I'm making is you're adapting something that you did regularly, which for my case was active trading, and you and I are pretty active traders. At least I was way more active back in the late 90s, and I continually trade less and less and less, but I'm also making it more quality. So when I was in my 20s, I wasn't going out there and drinking, a Macallan 12. I was like, give me Jack Daniels, give me, Jim Beam, Now I'm going to be more selective. I'm drinking the good stuff when I get all the fine or wines, the fine stuff. So I think with trading, it's kind of that same way. You mentioned that you're being a little bit more selective. You're identifying that bigger trend, which I think is absolutely critical. The trend is your friend to the bend at the end, is what I always say. So I like that you're getting older and maturing in your style, Jerry.
All right, so Merlin, for all the viewers out there, Merlin is speaking solely on behalf of himself.
There you
because
go.
he's making me out to getting older. I am actually getting younger every single day. The word that we're going to use for this show is I'm getting smarter, is what I'm getting. So I'm just getting smarter every day and every moment with what we're doing here. So there you go, Merlin.
I love it. I was having some fun. I know some of you don't drink. I didn't want to offend anybody there, but I just thought it's an entertaining analogy because as you become more mature, you kind of adapt. And you're like, hey, I don't want to drink this cheap stuff. I'm going to drink the good stuff. And if you're smart enough, you say, I'm not going to drink at all. I'll just have a glass of water, save yourself a bunch of money, time, and maybe health issues. But that's a whole different discussion for the Dr. C. Everett Koop podcast, which is not this one.
What we have.
All right, so we talked about larger time frames. I think that what else was there?
We're going to talk about times of the day as well, Merlin, remember?
Okay, let's talk about times of the day, because you are active throughout the trading day. I know you have a live trading room where we're live there. I'm so intermittent. Sometimes I just don't have time to trade during the day, so which is one of the reasons I've stepped back and done a lot more swing trading. But talk to me about your times of the day.
Yeah, I just, and I think it's just worth bringing up because I know, there are places who talk about it, and I don't know how accurate some of the information is that they share, but in my own experience, it does absolutely matter. I mean, first of all, the futures market is a 23-hour a day market, so pretty much 23 hours a day. So that's a really cool thing for us. And I know one of the things I've done in my course content, and we talk about a little bit in the room, is some of the different opens. So for example, and I know it's maybe it's not cliche for people to hear this again if they're a newer trader, but those first couple hours of the session day for the US, in other words, that I could do California time. So 6:30 to 8:30 California time, when the markets open, there are tremendous opportunities. I mean, markets are moving, the volume is awesome. Those can be really increased probabilities times of trading day, and then there are opportunities throughout the day, but in that last 2 hours, again, that like 11 to 1:15 Pacific time, it's amazing how some of these things move, and specifically that last hour. You know what, Merlin? I'm going to show you something real quick here. This is a home run example. We do get these in the markets. That's what makes it so much fun. But this is I want to show you. This is from yesterday, and this is a gold trade that I did today. But I can talk about that later. I'm going to pull this up real quick. I'm looking at the Nasdaq. I'll make it real nice for everybody here. But here's a 5-minute from yesterday. And this is, again, because we had an FOMC minutes announcement yesterday,
Yep.
Which is neither here nor there. But the point is, it does move the market.
Oh,
so
it had a big impact yesterday.
A huge impact. So the point I want to make, though, is just look at this last hour of the day. This is 1400. So this is 2 o'clock Central, 12 o'clock Pacific. This is the last hour of the day. And, we've got an entry, at least in my opinion, we have an entry here based on an indicator that I use, one of the indicators that I use. And I'm going to fib off that candle. You can see there's other things that are in place here, but literally the last hour of yesterday, all this market did was come straight down. I mean, it's about a 70-point move to the downside. And if you're, again, if you're following what I do in my room or in my courses, this thing, it never really gave you an opportunity to leave, because this indicator, which, I have about 5 functions of it, but one of the things I use it for is a trailer. It literally trails you down. And here, when the market finally closed, which was about 12:50, almost 1 o'clock, 10, before market closes, it went down almost 70 points. I mean, just a straight shot to the downside. But the point I want to make is that you could see, first of all, the accuracy. Here's the 2-to-1, here's the 3-to-1, but then also the time of day, because again, that last hour or two of the day, you have big traders coming in and taking, using a lot of volume. There's a lot of volume coming into the market. So that's what causes some of these moves to happen. So I guess the point I'm making, and like I said, I do talk about this in my courses, but is the times of day are so important. Those first couple hours, last couple hours, for everybody who's watching, again, if you're new to futures, a 70-point move on one contract is a $1,400 move. Okay. That's 55. Actually, it's about 45 minutes of work there. Okay. But just to put in perspective, what I'm talking about here, we're not talking about a few cents here. This is So, but the point I'm making is just the time of day, in where this stuff occurs. And like I said, there's opportunities all through the day, but those first couple hours, last couple hours, when that volume pours in, man, it can make for some really good moves. The probabilities increase because there's increased volume. The other time that I do like to bring up to people is and it's certainly not as significant as like the US Open, but the Asian and Australian Open, which is going to be, what is that? I think it's 5 o'clock Pacific, 7 Central. It's another time where price comes in. And again, the volume is nothing like during the day session. But again, if you're looking to get into futures and you're looking, you work or you're looking at specific times of day to be around, these are hopefully some positive ideas for you because it's amazing. Their London Open is great too, but that's in the middle of the night. So unless you've got a unique schedule, I myself, I require my sleep. So I'm not doing the London Open, but if it's available to someone, it's cool. So yeah, I just wanted to make that point because I think that's something useful for people to be aware of, that you can really kind of narrow down your day into a couple of different segments. And if you do it correctly and you understand, you have a strategy and you have a plan, it can be very worthwhile.
Yeah, absolutely. I think it all comes down to having rules, understanding what it is that you're doing and how you do it. For me, back in the late 90s, I called myself the 90-minute trader, and I would trade the opening 90 minutes like clockwork. That was where I had so much fun. That said, I have to caution everybody that's watching this, if you hear about, trading the open 5 minutes or the last 5 minutes of the equity markets, there's incredible volatility there, and things can whipsaw so quickly. I mean, things can change dramatically in that opening 5 minutes. Whipsaw is a very common term that you get. So I would encourage anybody that's starting off, don't trade the opening 15 minutes of the market. Let the volume come through from overnight orders. Let all that crazy volatility come out, and then it'll start to develop a trend. And yeah, you're missing out on that opening 15 minutes, which could be tremendous volatility. But if you're not quick on your execution, you don't have quick decision-making skill sets yet, there's no way you're going to be able to be consistent in that opening 15 minutes of the market because the volatility is so intense. I know some people here, I know Pepe, we had a conversation about it one day. That's his bread and butter. He loves it, but he's also been trading a while and been through a lot of education on it, and I think his skill set is at that point. But most people, I think, fail that opening 15 minutes because they just get whipsawed all the time.
I think that's a great point, Merlin, and I would agree with you on that. That's yeah, there's a number of different strategies that you could do after the first 15 minutes, after the first 30 minutes, and they all make a bunch of sense. So yeah, I agree with you. I think staying out of the first couple minutes of it there's nothing wrong with that. It can be very volatile, and if you are newer, that's not the time to start learning by any means. So I agree with you 100% on that.
Nice. Tell me a little bit about your schedule. I know I'll bring up the website here for everybody. Jerry has his own company here. It's called Pacific Shores Trading. You can see there's that smiley face there. You got the update on this front page saying, join me at 4 o'clock Central. What's new with your company, and what would you like to share with people about it?
Yeah, it's been great, Merlin. We're seeing nice growth. People are coming in on a regular basis. I do get a really nice following from you and from your show. We do stuff here. People are curious about what we're doing, and they come in and they sign up for the room. And that's what I always encourage people to do. It's, I've got a monthly membership rate, which is very, very competitively priced. And I would come in, take a look at it, spend some time with us. If you like what I'm doing here, you can go further with this. And obviously if this isn't for you, you can move forward. That's all good. But I love getting people in who are serious about trading, are serious about wanting to learn how to do this. I've got a few new people in the room recently, and it's funny. One of the guys today made a comment about gold. He's like, "Hey, have we looked at gold yet?" And I hadn't looked at it at the radar screen yet, and it ended up making a huge move. But I love seeing the progress in some of the people who are newer to my room, and but these guys have invested in the courses. They're in the room on a regular basis, and so the progress is really great, and that's always very satisfying to me because I really like trading. I do like hosting the room every day, and it's nice to have a good group in there. And then it's also really nice to see that people are benefiting from it. So one of the promos I have going on right now for people is I did a trade plan course a couple months ago that was really well received. I had a lot of people get into it. It's an on-demand version. It's on the website. And so the on-demand version is still available, obviously, but what I'm going to be doing next week, Wednesday, is I'm going to be redoing the course live. So any of your viewers or anyone at this point who enrolls in that course will get the on-demand version that's at the website, but then they'll also have a chance to come in Next Wednesday, I'm going to do it at 10 o'clock Central and be a live participant in me redoing the course for them. So what that's going to basically do is give them an opportunity if they have any questions, need any clarifications, they have any kind of input or things they want to share or clarify, they're going to have an opportunity to do that because it's going to be done via Zoom and they're going to be a live participant. So anyone who enrolls in that trade plan course will also get to join me next Wednesday live, with other students in there as well, so that they can, again, if there's any questions or things they want clarification on, they can do it. So that's kind of what's going on in our world, Merlin. It's been really great, and but I wanted to run that kind of by your viewers because we get a lot of great people from your show, and again, I want people who are serious and are serious about their progression. I always encourage people to go to the testimonial page on my website. Please read those because that says it all. That says more than I could possibly say. When people start saying nice things, about what their experience is like and the progress that they're seeing. I've got people in there who've done testimonials. They've gone through 10 years of education and in some cases, they've spent $50,000 in education and are not where they thought they would be. They've come into my place, and then within a few months, they're seeing tremendous progress. So that makes me feel good, and that's why I like to share that. So, yeah, that's what we have going on, Merlin.
Cool. Glad to hear it. Good to see things are going well for you, and I appreciate you coming on and sharing some talk about the larger time frames. It's funny because when you said larger time frames, I'm like, larger time frame for you. I want to know what your larger time frame is, and now I know it's the 60 minutes.
Yes, you do. Nice. Yeah, you're always a pleasure, Merlin. I love what you're doing. You got a great following. You got a great group. People love you. They love what you're doing, and I'm always grateful to be a part of this. So thank you, and I'm looking forward to seeing you again soon.
Sounds good, Jerry. Take care, my friend.
All right, you too. Thank you, Merlin.
Bye-bye. That was Jerry Baldwin of Pacific Shores Trading. If you want more information, you can visit pacificstorestrading.com. I have that right up here for you. And there you go. A lot of people spend a lot of money on education. And, I think I'm not going to say that $50,000 is too much. It really depends on what you get out of it. If you're one of those people that spend $50,000 on education and you don't use it, then that's on you. If you spend $50,000 in education and you're constantly immersing yourself and utilizing that to its fullest, then it's probably not that expensive of a cost, especially when you consider what the cost of a college degree is, and most of us have a college degree that just sits there worthless. Sorry, Helena, I didn't get a chance to ask that question. I'm sure all the information that you want to know is at the pacificstorestrading.com front page there. You get more information there. All right, let's see. Let's start with our overall markets. As you know, Bitcoin just getting kicked in the teeth right now, tanking. 27,850 is where it's at right now. That's down 4.39%. And I'll bring this up into a 5-minute time frame because you can kind of see where the news broke of Elon Musk. It was early this morning to talk about SpaceX selling $370-something million worth of Bitcoin. I think that was the main culprit of this. Although I think a lot of it has to do with the overall markets as well. Since markets are trending down and drifting lower, we saw that kind of continue on with the crypto markets, which are still going lower. So 4.39% slide for Bitcoin. Russell tanking as well. Actually, everything really tanking today except crude oil. Now, what's noteworthy here, we drew out this lower area where I said we're going to come in. If we keep falling, we'll fall towards this 1862 mark, which we have now passed. And now you are coming into this much, I don't want to say bigger, but there's like this level on a level, if you will, right here, right around from 1825 to 1862. I know it's a massive range, but we might find ourselves deeper in that here in the next couple of days. 1825 certainly being a low point there, which was the low back in June, I think June 23rd or something like that. So there you go. For the Russell NASDAQ breaking down, and I saw a couple comments earlier about, tech leading the sell-off. Absolutely. It was a pretty ugly one. Michael was talking about tech sell-off. Yeah. Not only did we come into that area of demand, we broke it. You're now down below it. So now there was comments yesterday about filling that gap on the NASDAQ. 14,516 will be the next stopping point for this one. Although, we've had a lot of pain in the last 3 trading sessions, right? Tuesday, Wednesday, Thursday have been aggressive. They've actually opened near the highs, closed near the lows. So really bad. Not liking this current trend. Michael Burry, I hope he still got that option trade on. I still, every time I watch some media stuff or read articles, it was just driving me nuts. It's like, he opened a brand new options position. It's like, oh, you people don't even know. So, if I'm looking at this from a forward-looking perspective, I would say that we have broken this uptrend, right? We now are making a new pivot low. And, the question is, does this now become the point for a bigger downtrend? Do we start to see the reversal continue? And now all of a sudden we start making lower lows and lower highs. That's the question at this point. But I think we've transitioned out of almost a purely bullish market, at least for this year, If you look to January 21st or January 1st, it's been higher highs, higher lows with no deviation from that. Now, we did break this most recent pivot low to the downside. That to me is a pretty negative sign overall, and I think you're going to see maybe more triggering of selling going on, pushing this lower. So for those of you perma bulls out there, be careful. I might want to buy a little bit of protection here, or maybe start to look for short plays. We'll have to see how my portfolio pans out. Today's action actually I think might trigger a bunch of my puts, which will put some shares to me tomorrow. Hopefully we don't get a big slide. Maybe a little bit of a pop-up would be great. So anyway, that's your NASDAQ down 1.1%. All the indexes were down. Dow is down 0.82%. Here's the S&P down 0.8%. Also breaking down below that low that we mapped out a couple days ago. We didn't even hesitate there. Just went right through. And now your next stop before we get a big drop is that little yellow line I'm putting right there on your screen. That's going to be between 43.66 and 43.91. After that, you're looking at 4,300. And that could very easily happen here in a short period of time. Buy the dips and keep buying the dips. Yeah, you got to be careful with that, Pepe. Everything works until it doesn't. And in an uptrend, buying the dips is a great idea. However, if you look at these charts, we're starting to make new lows, which means that the confidence of that uptrend is starting to wane. Doesn't mean it's done. Doesn't mean it's over. In the long haul, you're right, Pepe. It will go up over time. But I think we would all agree that these markets are due for a correction. I mean, I think it's long overdue. Now, granted, we did have that big sell-off in 2021. Right? That was a pretty significant one. We've been rallying ever since. We hit that double top on the NASDAQ, which we talked, S&P, which we talked about. And now the question is just, how big of a dip do we get? Is this it? Do we stop at this? I don't know. I'm not clairvoyant. I wish I was. It'd be a totally different story. I'm kind of with Pepe on this one, which is you've got that S&P right into a pretty decent area of demand. I may go long tomorrow. We'll have to wait and see. Maybe I'll just buy some out of the money calls and see how it pans out for the next 120 days or so. But right now, it's feeling very bearish. I do think you'll get a little bit of a bounce, but overall, it's a question of has this trend been broken and are we going to start to see more downtrend? Gold down 0.68%, continuing its dozen days in a row of just downslide. Now we've reached that area of demand, which I had mentioned. I thought we were going to get down to it. Didn't think it happened this quickly, but here we are, currently trading at 1915, and I have that demand zone between 1917 and 1900. So we are drifting lower and lower and lower on that bad boy. The dollar index, there's your Dixie, drifting higher. Today, a little bit of a hesitation right near the very upper edge of this box we drew on the screen. That area is about 103.57, and today we hit an intraday high of 103.59. So we breached it, but we haven't really broken above it. You notice that this is also a level on a level, right? Back over here, level on level. So keep your eye on that one. All in all, it just feels like this dollar just keeps on getting stronger, even though Donald Trump is on some media channel saying, we're losing the dollar. It's looking terrible. It looks pretty damn good right now. Here's your 10-year. Now notice the surge. My target, this is today, so we're already on the Friday session according to the bond market, but you notice my target was 4.335. Today we hit an intraday high of 4.328. Ever so close to my target there of that point, 4.335, which goes back to this peak we saw way over here in October of last year. But all in all, this looks very strong, guys. This is yield. Looks real strong, and from the looks of it, there's obviously many different things that could happen. I could have a sell-off, and as long as it doesn't break, let's say, these lows of 3.77, I'll still think we're in an uptrend. It could rip right through this, which I don't think will happen. I think what will happen is have a little bit of a pullback, and then it'll challenge that 4.335 again, and then it'll start to rip from there. Again, this is tough. Merlin, I remember back, you had a viewer back in the day that was always saying the markets always go up. Yeah, what was that guy's name? Invincible Me or Indiscriminable or something like that. Invincible or some name like that. And I'm, I wasn't trying to throw shade at the guy. Nothing goes up forever. If you take a step back and you look at the course of markets since inception, they will always go up. You have to know that. They will always go up. The reason is, again, it's like football teams. They swap out the bad players for good players, meaning bad stocks for good stocks, and over time, that thing will go up over time. However, we might find ourselves in a phase where for a period of 2, 3, 5, 10, 15 years, we're in a down market. And, we have to adapt to those things, because if you're long and you're a buy and hold investor and we go through a 3-year slide, you're now stuck holding something for 3 years, whereas you could have gotten out of those long positions, shorted, made a lot of money on the way down, and then once it started to turn, stops you out, you can go long at that point and buy much lower. So, no problem, Shinobi. Have a great night. Hope you do well. Exactly, they are designed to. There was unscammable. Ah, yes. Firmable reminds me of unscammable. That was the guy. Always bullish, which is fine, cool. You know, as long as you got a strategy in place to protect yourself, awesome. What do you think about Ramaswamy as a presidential candidate? Just wondering. I'm not going to go into politics, Pepe. I start to burn bridges. I don't want to polarize anybody here. You know, I certainly have my opinions on different political people, but I've noticed that if I say something pro one side, it polarizes the audience, and then some of you will just decide, oh, I don't want to listen to this guy anymore. He's an idiot because he supported X candidate. So I'm listening to them all. I will definitely say I've listened to that guy. Yeah, the other dude in Calvin. Yep, exactly. Yeah. Right, Pepe, there's a few. That was Ruben Landon Dante, who's now running for political office. Shockingly. Good for him. Good luck to you, sir. And then Brendan, I think he's just went off onto other channels that interested him more than this one. So that's cool. All right, let me... I didn't get the top one. Ta-da! So we had that 10-year. What was that comment there from Margaret? Higher yields now will kill what or hurt what? So higher yields, if this trend continues to the upside, what this does is it put pressures on business. The cost of capital goes up. The cost of houses goes up. So for anybody looking to buy now, you know, it's getting harder and harder. So essentially, this puts more brakes on the economy. So as we saw conflicting data yesterday, that's why I did that confusing data show, is, you know, retail sales numbers look great. But if yields continue to go up, businesses are going to start to get hurt a little bit more. There's going to be less expansion going on. The access to capital and markets to expand is going to decline. And that means that businesses will start to slow. That domino effect means that we start to see more layoffs. Once the layoffs start to happen, that means people have less money. And then people have less money, that means they spend less. People spend less, we go through more layoffs. So boom, 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 downward cycle. That's in a catastrophe type of scenario. It obviously takes a long time for that data to pan out. It's not like it's going to happen by next Friday. But if we continue to see these yields rise, the higher they go, the more likely the economy is going to stop. Think of bond yields as a gas pedal, right? When you want the market to rip and go straight up, you step on the gas pedal. Stepping on the gas pedal would be reducing those yields, right? Dropping those yields as much as possible, making money cheap, right? That's more gas to the system. Raising rates is now you're stepping on the brake. And the Fed has aggressively pushed on that brake by raising 75 basis points, 50 basis points, 25. You know, we're vaulting higher. And again, my argument is we're still waiting for the impacts of some of those pressing on the economic brake pedal by raising rates to hit the system. We haven't felt that hit the bottom line yet. So I think there's still that wild card, which is why I still have that little bit of bearishness for the tail end of the year, even though we've had such a monumental first half of the year. So yeah, again, raising rates slows the economy down. That means businesses will most likely suffer. Equity markets will probably slow down as well. And you look at the price charts right now. Here is your daily. Not that this is directly a result of the bond increases, but a lot of stuff was overpriced. A lot of it was overpriced, and now I think it's just coming back down to some reality levels. You look at some of the big names out there today. Look at Apple. Right, Apple getting crushed over the past couple of weeks, and hopefully they release their iPhone. But from that fall we saw on October 1st or August 1st to where we are today, Apple's down 11%. I know a lot of you are probably thinking, "Oh, that's a great buy." Now hold your horses. I wouldn't rush into that one. Amazon, right? Had a nice gap up on their earnings and now been given back ever since then. Google or Alphabet is the only one here that's really holding tight. You look at Meta. Meta now in a really ugly position. Not only is Meta rolling over, but it also broke that most recent pivot low from back in July 24th. Now all of a sudden it's a question of, do we see these unfilled gaps? One that goes all the way back to April. Does that one fill at 211? I might be a buyer at 211. There's also another unfilled gap at 153. Right, so there's a lot of pullback potential here for things like Meta. If we do a Fibonacci retracement and go from that low we saw back in November of last year to where we peaked at, a 38% retracement would be right around 235. So, some of these could come into play. You actually have a confluence level that I have here at 178. So, yeah, I think that there's definitely the potential for more damage. Tesla, which I will most likely be an owner of starting tomorrow afternoon. I had the 227s. So right now I'm down about $10 on my once those shares will be executed to me. I think I'm not sure how many puts of Tesla I sold. I may have sold one, no more than 5. I'm not sure. I have a whole bunch of other stuff open right now, but whatever it is, I'm going to be down a pretty good clip starting tomorrow. We'll see on Monday morning if I get executed or not on that one. Let's see what else we got. I wish we could have those two younger candidates. I had a conversation with a friend of mine. Regardless of Democrat, Republican, or Libertarian, what I want is I would like to see a young, educated, and articulate individual. I'm not saying in their 20s or 30s. I need some life experience, but I would like somebody who's open-minded about technology, who's open-minded about peace and diplomacy, and not stuck in this Cold War era political status where we have to think everybody's our enemy and we hate everybody and let's just start wars to keep the political machine running. I think younger generation is kind of fed up with that BS that you and I have been a part of for most of our lives, right? Russia has always been an enemy. I'm not saying they don't need to be. There might be some things they're doing wrong, but if you call someone an enemy outright and you keep yelling at someone saying, I hate you, you're my enemy, you might actually have nothing to fight about other than you just hate each other. Well, maybe some diplomacy and working together on things and, could actually start to heal some of this. And if we rise up globally as a global economy, then everyone prospers. Why do we have to hate everybody? Anyway, sorry. You started this, Pepe, getting me on a rant. Yeah, we need to change. I think term limits. I mean, if you can't move, if you can't function, if you stand in front of a podium and literally freeze up for 30 seconds because you just don't know what to say because you're so old and decrepit, then go retire. Do something good. Stop running my country. And China, right? We've pointed the finger at China forever. Like, China's bad. China's bad. No. They're just a different culture. They're just different in the way that they do things in China. That doesn't mean it's necessarily bad. They may look at us and think that what we're doing is stupid. I would argue that Keynesian economics is relatively stupid in the way we've handled the financial markets for the past 20, 30 years. Yep, I agree, Andrew. Diplomacy is the word. All right, I am way past my allotted time. Let me go into your economic announcements for tomorrow. The 18th. Oh, boy. Here's what we've got cooking for the 18th. Really nothing on the earnings front, so I'll just show you. For Friday's session, we have nothing as well. You see the euro has some CPI numbers, and that's pretty much it. Today, the 17th, we had unemployment claims, which came out slightly lower than expected, but I'm not too worried about that. I did notice that the Philly Fed manufacturing numbers were slightly higher, which I think is a good thing. Right, let's get manufacturing back up. Next week, we got a lot of services and manufacturing data coming out for the European Union, for England, and for the United States. So that's it. It should be a relatively, I say quiet Friday because I don't have any economic announcements that are noteworthy. I don't have any earnings announcements which are that noteworthy, so should be okay. Eddie Young, billionaire entrepreneur, running top candidate. Yep. And you know what I'd like to see personally? I'd like to see somebody with the attitude of Elon Musk, which is, Musk has a very Donald Trump kind of attitude, which is, I don't give an F. I don't care. I'm going to do what I think is right. Now, I think that with Donald Trump's actions, I think in many cases we're very self-interested. I think Elon Musk actually has some altruistic properties to him that could really benefit, but he can't be president anyway, so there you go. As long as you're friends with John O'Donnell, you're open-minded enough for me. I will always be open-minded, Larry. I think as soon as I start to close off and become very opinionated and staunchly against something other than that piece of crap trader out of Chicago who thinks he's great, I think that I stunt my personal growth. I stunt my ability to think rationally and objectively and think of all things. And I think trading has actually taught me that. Trading has taught me that I have to absorb all pieces of information at face value, put my opinions, my angst aside, and just go with the facts, be non-biased, unemotional, and make those trades. And I think politics should be similar. Vivek is running for president. Yep. All right, well, that's going to do it for me. Where I think AMC is going? Tough one. You got me right at the end there. I'll bring up AMC because I actually thought about selling some puts on it. I'm not touching AMC. I'm unfortunately, I didn't sell those puts. Could it easily close this gap? Yes. But they've got a lot of problems. I would not be a buy and hold investor of AMC at this point. I think they've just got way too many hurdles. They put themselves in a terrible financial position. I've noticed now a lot of movies they release in the theater for 1 week, and next thing you know, they're available on my Paramount Plus or HBO Plus and these different applications, which eats away at movie theater goers. Honestly, you really couldn't even pay me to go to a movie now. I'm sick of these millennials on their phone texting updates. Hey, I'm in a movie theater watching a movie. Yeah, I know, you clown. Put your phone down. So I don't even go there anymore, but that doesn't mean that AMC can't survive. I'm not a fan, Michael. Long story short, I wouldn't touch AMC. Look at the chart, man. Look at the chart. Remember, I'm trying to make money when this thing goes up. In this case, it's done nothing but go down. It's just like GME, right? I've mentioned many times, I think GME is going to zero. Does that mean buying it right now is dumb? No, it could have a bounce. It could jump again to 24, but long term, GameStop is going under. They're going to go bankrupt. Mark my words, they will go bankrupt at some point in time because no one's buying games anymore. You download everything. Anyway, that's my thought on AMC. I'm not into it. I think, I'm not into bottom fishing right now. Could it have a bounce? Sure. But I'd rather go with something that has a more discernible, predictable trend. All right. That's going to do it for me, everybody. I am, again, giving a presentation tonight for anybody who's into crypto. If you know anybody who's interested in crypto or freaked out about crypto, wants to know more about crypto and digital assets, I'm doing a session tonight talking about building a portfolio of digital assets and kind of why it's important to. And what I'm going to build on is a lot of stuff that I've learned historically. What has history taught me about innovation, about great ideas? And we talked about that on this program a little bit. So you guys kind of have the gist of what I'm going to talk about tonight. Anyway, we talk about, innovation and how do we capitalize on it. That's what I'm going to focus on with the crypto side of things tonight. So I'm going to take a quick little break here, and I'll be back on that link I just sent you there. If you haven't registered yet, sign up for that one. Share it with your family and friends if anybody would like to know more about building a crypto portfolio, particularly if someone is a long-term investor. And I will see you guys in about an hour and 10 minutes. So thank you, everybody. Have a fantastic night. Tomorrow is Friday. If you have anything that you want me to discuss on tomorrow's show, email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos. Hit that like button. Hit the subscribe button if you're new. And I will see you guys tomorrow. Take care.